You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. What's going on in the world of futures options? Let's find out together, shall we? It is time once again for TWIFO. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are spending so much time. Welcome. There's lots of time for you to spend there, so take your time, enjoy it. A lot of you coming in via the tubes these days. However you want to get the contents, available just about every platform under the sun. Make sure, if you like what you hear, throw a like, a star, a comment, a rating, a review. It all helps new people continue to discover the content. And of course, if you want to discover more content in your lives, like awesome pro Q&As, just did an awesome volatility-oriented one earlier this week, or options oddities after volatility views, or early access to all the content coming out from OIC and a whole bunch more. theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old CME Group Hot Seat, I am pleased to welcome back this week our old friend, Mr. Dan Gramza from Gramza Capital Management, doing his monthly check-in. Mr. Dan, welcome back to the show, sir.
Well, thank you very much, Mark. Great to be with you. It's always good to explore these markets with you. I really enjoy doing this, so I'm excited about being here today.
Well, we're excited to have you. How are things in the land of Gramza, sir?
All goes very well, thank you. This weather's been terrific here in the Chicagoland area, and I hope it lasts. I don't have to worry about shoveling snow now, so that's a good thing. But yes, yeah, life is good. Very blessed. Thank you.
Well, let's see if these markets are good, listeners. A little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. And Mr. Dan, you've been on the show once or twice now, so you know how this works. If you'd like to take the reins, sir, and break down the light side and the dark side for us, have at it, sir. The floor is yours.
Well, thank you very much. Okay, let's start with the light side. And it's a very interesting list that we have here. Number 5 on the light side is soybean meal. That's up 2.47%. It was number 4 to the dark side last week at a negative 0.99%. 90,000 contracts last week were traded. Number 4, and soybean is such an interesting market, by the way, on a global basis. But let's talk about number 4 because we hear so much about it, and that's Bitcoin. That's up 3.99%. Number 5 to the light side last week at up 4.41%. And that was 1,067 contracts traded last week. It's really an interesting market as well. We got a lot to talk about there if we want to. Let's take a look at what's happening with number 3. We have wheat, and that's up 4.67%. We have Kansas City hard red winter wheat. That's up 4.98%. That's number 2. And nat gas up 9.68%, number 3 to the light side last week at up 5.64%. 700,000 contracts traded last week in that market. And that is a hot one to take a look at. We should explore that a bit because there's a lot going on there too. And some of it's really surprising. Now, let's take a look at the dark side. Number 5. Number 5, rough rice. That's down 3.04%. Oats, number 4, down 3.04%. Number 2 to the dark side last week at a negative 1.87% and 6 contracts in that market. So not a heavily traded ag market, but it is a critical one, by the way, from an animal feed point of view. Lean hogs is number 3. That was down 3.96%. Platinum, number 2, down 4.09%. It won to the light side last week at being up 7.68%. 7,100 contracts traded last week. Number 1 to the dark side. That's class 3 milk. That was down 5.21%. Also, and you may be looking for this market, and that's WTI. Where is that fitting in? Well, that was number 8, actually. It was down 2.62%. Last week, it was only number 21. It was down 2.25%. So that's an interesting market as well. The energy complex has some challenges, I would say, currently going on. But anyways, that's the light side and the dark side.
Well done, Mr. Dan. You crushed it. I was going to hand the whole show off to you. I'm going to take a break for an hour, and I'll come back and let Dan run with it. A great job there, sir. Well done. And now I will take over for you, sir, and I will dive right on into the CVOL movers and shakers for the week. Again, listener, you can find these for yourselves. Just type in CME and CVOL into whatever browser you've got cooking over there, and it should get you here. You could rank them if you go to the aggregates, and then you sort them in a grouped list. You can do exactly what we're doing here, and make sure you set the date range for 1 week, and that will get you here to the CVOL aggregate movers and shakers for the week. Again, these are all the aggregate indexes that CME puts out over there. So we'll start the biggest mover, as Dan was just talking about, nat gas dominating our light side this week. interesting things afoot in the energy complex. That is reflected in the energy CVOL this week, listeners. 52.02, up 6.69 points. Also worth noting, at the absolute apex of its range for the week, the low is actually 42.42. So energy vol in aggregate popped nearly 10 points this week. So a lot going on in energy. We're definitely going to have to hang out there this week on the show. That's our number one vol mover here, certainly to the light side, and indeed across the whole spectrum for the week. Behind it, we have the aggregate commodities CVOL. That's, again, all the commodity products kind of lumped together. 34.76, up about 2.67 points on the week. So a decent pop for the commodities aggregate CVOL as well. Another one that's hanging out at the high end of its range for the week. The low was about exactly 30. That was earlier this week. And the high coming right now, 34.76. So both energy and commodities pinning the needle on the vol front this week. Behind it, we have FX. Don't see FX lighting it up too much, but it's starting from a low baseline of 6.12. So a move of 0.14 is actually pretty big. FX vol off the highs of its week. That was 6.2 set earlier this week. The low came 5.95 last week. So a little bit of vol range for FX. And then below it, we have the Treasury CVOL. Now remember, Treasury vol comes in two flavors, price vol and yield vol. We'll go for the price vol first. That's at a 5.3. That's up about 0.03 on the week. So kind of an unched week. The low was 5.27, so pretty much hanging out at the lows for the week right now. The high was 5.51 a few sessions back. Then below it, we have the Treasury yield vol. Get a little bit more action out there, even though not much this week. 98.99 is where we're hanging out right now, so pretty much a 99. That's off about half a point, almost about 0.4 on the week. We're at the low end for the range this week. The high was 104.9, so a little bit more movement intra-week. We are hanging out at the low end of that weekly range right now. Then below that, we have the metals aggregate CVOL. We've been talking a lot of metals lately. This week, they're slotting in one from the bottom on the CVOL list, 20.44, off about 0.52 on the week. The range this week for the metals CVOL, 19.65 to the dark side and 22.26 to the upside. So hanging out about a point off the low, about 0.8 there. So an interesting week for metals vol. And then at the bottom of our list, we have the aggregate ag products, 21.99, off about 3/4 of a point this week. Also hanging out right pretty much near the low for the week of 21.93. That was set earlier this morning. The high came last week, 23.42. So there you go, listeners. There is your CVOL movers and shakers for the week. But now it's time for us to keep on going. Dan alluded to it. We can't ignore it yet again this week. We have to kick things off in energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, let us commence our journey in a very frequent starting point these days. It is nat gas, delivering on all fronts once again. But first, go into that cmegroup.com/TWIFO page. Go to that drop down. Go to the asset class list. You're going to go down 2 slots from the top to energy. Then you're going down a couple more to nat gas. And then from there, you'll see we're hanging out at that front future at a 2.65. That goes away in about a day, though. If you go out to even 8 days, we're hanging out nearly a 3, 2.91 in that future. Hence some of this upside movement we've been seeing out here in nat gas of late. Now, if you're wondering, energy delivering on the vol front this week, at least in aggregate. Nat gas delivering on the movement front, up nearly 10% this week, 9.68%. It was, of course, a banger last week as well, up 5.64%. If you're saying, there's no way nat gas can deliver on the volume front as well this week, well, you would be mistaken. Over 1.1 million contracts on the tape in nat gas. Once again, putting the lie to the fact that nobody wants to trade options on a sub $5 underline because nat gas continues to blow the doors off week after week. You folks clearly cannot get enough nat gas in your lives. And of that over 1 million contracts, about exactly a third, 33%, went up in the June contract that goes away in, about 5 days. So we're going to hang out there, listeners, which is, again, kind of near dated from our perspective for talking vol and skew, but hey, we go where the paper dictates, listeners. If you want to go a little bit farther out, if you want to get a little bit more meat on the bone, we can go out to July. That's 33 days. That's where about 24% of the paper went up this week as well. Maybe we'll do a little bit of both, tell you what. The future on both, about 2.92 right now, up nearly 5% this week, 4.66% just since Monday. The vol in the 5-day to go contract, which again, mostly gamma there, is at about a 73 versus the vol in the July contract at about a 62 3/4. The July vol up 11.5 points. So vol exploding, pun intended, in nat gas. Big move in the near dated vol out there as well. In terms of skew, near dated, the puts last week 4.3% cheap. This week 2.1% cheap. So still slightly cheap. If we go out to the July contract, the puts last week about 3.7% cheap. This week about 1%. So the puts catching a bit of a bid slightly in both expiration cycles. The calls and the near dated stuff 2.6% rich last week and about the same level this week, 2.5% rich. And if we go out to about 30 days, the calls last week 4.3% bid. This week about flat. So that call bid has vanished, which is kind of interesting. All right, Dan, that's a lot of table setting here for nat gas. I almost seem like some weeks we could just call this the nat gas show. There's so much going on out there. Look at this. It's not even a sub $5, sub $3 underlying, Dan, and it's putting up 1.1 million contracts. This is crazy. What is catching your eye out there, and yet another explosive week for nat gas, sir?
Well, it's an amazing market. Truly is a global market when we think about what it is. So the action that we're seeing in that regard, not too surprising, but here's where I think it becomes very interesting in terms of the action that we're seeing just over the last 4 days. Well, actually, if we think about it, the last month, we were at the beginning of the month $1.90, and now we touched or kissed $2.90 today. But what's interesting about nat gas is we have increasing output. So as prices go higher, producers want to produce more at that higher level. And we also have inventory up almost 29% above the 5-year average. So we got a lot of inventory. We got production coming in. What is good for LNG, or the transport of nat gas over water, is Freeport down in Texas. That's fully operational. So we have the ability to export some of that nat gas. Basically what they do, if you're not familiar with it, to get liquefied natural gas, since it is a gas, they just freeze it. They get a very cold temperature, high pressure, and it transforms from a gas to a liquid. And that's what they send overseas. And the issue with that is, because of those extra steps, it's a very specialized product to ship, as opposed to crude oil, for example. So because of these very specific shipping conditions, we have a few plants that are critical. And Freeport, if you hear about Freeport down in Texas, pay attention, because that's a major LNG export facility. So we have those dynamics going on. But do we have demand to support all of this? And I think that's what it comes down to, where we are right now. And I said the last 4 days, it's what I call equal and opposites. It represents rejection. So yes, we traded above 290 today, but the issue to me, it's the way we did it. We did it after it hit above 290, we found sellers. And that's where it is right now. It went from 290, down to around 266 or so. So it tells us something about the action at these levels. Yesterday, we closed above 280. And so today we rally and we break. The 2 days before that, the same thing, positive day, then a negative day. It's what I call this equal and opposite, or another way to think about it, it's rejection above 270, 265, in that range. So what does that mean then? Well, we got a lot of supply. We have demand not really soaking this up. Who's doing that? And typically when you see that, that's hedging. So right now, the marketplace is locking in, I think, on these levels, that 266 to 290 as a hedging range. And so what does that mean to you and I from a longer term point of view? Well, if our supplies continue to increase, unless we get unusual demand coming online, and as weather changes here in the United States, that could happen. As weathers increase, temperatures increase, we have an increase in air conditioning. And we can produce more electricity in the United States with natural gas than any other product, including coal. So a third goes to produce electricity, a third goes to industrial applications, steel industry, chemical industry, a third goes to heat our homes and cook our food. So if we have increasing temperatures in the United States, increasing air conditioning demand, increasing electricity demand, well, we could see this market moving higher. If we have unusual conditions globally, Asia or Europe, then we could see increasing demand here. But right now, we don't see those things. But there's one other characteristic I think you and I should be sensitive to, and that is if we get below 266, it's never been able to push below that for the last 4 days. Every time we got below 266, buyers came back in. It's bouncy at that level. So to the downside, that's a big challenge too. Now, if we go below 266, you want to see this moving right back down towards that 263 to 260. You want it to move lower dramatically because they've been buying that break. They've been buying it around 266. So if we trade below that, that means everybody who's been buying this for the last 4 days are now going to lose money. So what do? They sell to get out of that position, which adds selling order flow, which can cause this market to break. And that's why you want it to be dramatic. If it isn't, if we do trade below, because we're seeing sellers today, and if on Monday we trade below 266 and it kisses 265 or something like that, look for a sideways move in nat gas because that's where we are, and that would be the expected behavior. So the next few days, I think, could be very interesting for this market. And if sellers are here, you want to see their footprints within the next 2 to 3 days. In other words, you do want to be down to that 260 level by Wednesday of next week.
An equal and opposite market. I like that. I think we could use that to apply to a lot of things this week out here, Mr. Dan. But let's start in nat gas here because it was another banger, dare I say it, explosive week here. Listen, I know we beat that to death here on the show, but what can we say? Nat gas putting up the numbers. The big dog this week, listeners, the 3 calls expiring in 5 days, doing 46, almost 47,000 contracts. That was the number one spot. It was a tight fight for number one, but the 3 calls took it. Looks like folks were mostly bailing on these. Again, that future's at 265, so 3 call. It's got a ways to go in 5 days. Looks like folks, again, were mostly bailing on these. The big day was Tuesday, 15,600. Mostly closing 12,600 on Wednesday, again closing. Opening on Monday, 8,600, and about 10,000 going up today against an OI remaining of about 22,000. So it seems like some folks took a little bit of this run this week and used it as an opportunity to get the heck out of the threes. I don't know what the heck they're getting for the threes or if they were short them and they were spooked. Either way, we didn't see much evolution on the call skew at all this week. So kind of a weird week, but that's what we saw from number one. And behind it, a close fight, like we said, number 2 coming in a little bit down the road. We're talking now the July 2.5 puts. These have about 33 days to go. And these were number 2 at 44,000 and change going up this week. The big day for these today, 15, almost 16,000 going up today against an OI of nearly 30,000. So folks could be bailing on these today, but that doesn't seem like it because they've been opening all week long on these puts. 14,000 going up yesterday, 9,000 on Tuesday, 5,000 on Monday. Again, opening all week long. These are the 2.5 puts. That future's at a 291. So folks opening up, maybe thinking, there's a little bit of retracement due for us here in nat gas. I mean, looking at the puts, they did catch a bit of a bid in the put wing this week. So there could certainly be some opening buying paper there. And then behind that for number 3, we have to go back to the 2.5 puts expiring in 5 days. These did 31,000 contracts this week. So again, a banger week. You add up a couple of these and you have more than, let's say, a lot of the metals we might talk, more than a lot of complexes we could talk about. So again, nat gas very much leading the way right now. 31,000 contracts, 2.5 puts going out in 5 days. The big day was Tuesday, 11,300. Again, opening. 2.5 puts, these make a little bit more sense with that future a little bit north of 260, about 265. We have a chance of hitting this level. Opening all week long, again, Tuesday, 11,000 and change. Wednesday, about 8,600. Monday, 6,500. And today, 4,600 against an OI of about a little shy of 18,000. So opening paper, 2.5 puts or 3 calls. Which would you rather have in your back pocket in 5 days, listeners? I know which way I would go. Which way would you go out there? And then behind that for number 4, we have, looks like, the 3.5 calls also in July. So these again going out in about 33 days, going up about 28,500 times so far this week. The big day for those, Wednesday, 11,000 and change on Wednesday, 8,100 today, and about 4,500 each Monday and Tuesday. Looks like opening all week long with the exception of Monday. And today's OI is about 16,500. So folks could be closing today. You can be closing your July 3.5s today. We've seen crazier things. Let's scroll a little bit farther down, listen to see if we see any other interesting and or aberrant paper. And the answer is no. Nat gas really, once you get outside of, the front few months here, all the way out to, let's say, October, the volume really kind of dries up. Then you have the 2.5 puts in November doing 4,300 contracts. The DEES, the big trade in DEES is 1,000 of the 4 calls. So you're not seeing a ton of longer term paper. It's all in let's say the front 6 months or so. That's where all this action is. So people expecting a banger time here for nat gas for at least through, let's say, October, listeners, which is interesting stuff. All right, Mr. Dan, we did nat gas. Anything else? You want to stay in energy or you want to roll on to another complex, sir? The show is in your hands. Do with it what you will.
Well, shall we take a look at crude oil since we're here?
Since
Just
we're
take
here,
a quick peek at that.
I think we could make that happen, Mr. Dan. Again, it was number 8 on our movers and shakers this week, listeners. So just managing to not make it onto the list. By the way, if you're wondering how does this week shape up from an overall perspective, it's, I would say, about 65% to 70% red this week. So a pretty red week coming into today. So it takes a lot to make it into our bottom 5 this week, which is why WTI not making it onto the list this week. But again, let's see if WTI can put up the numbers out here. Listeners, go into that drop down. Keep it in energy, but you're going to pop up 3 slots to crude oil, listeners. And then you're going to click on, of course, our old friend WTI. Now, it takes a lot to usurp nat gas when it has the bit in its teeth doing 1.1 million contracts. We'll see what WTI can muster this week. And, given all the tumult in the Middle East over the past week, you might be forgiven for expecting a little bit more paper on the tape, but we're not getting it this week. Barely 400,000, 402,000. That's a light week on any given week out there. Usually we expect around 440, 450 for WTI. So kind of light paper out there. WTI right now, 76.94 in that front future, off about 2 2/3 points, or about 3.3%. Again, just this week. Of course, if you go back to the end of our show last week, it was off about 2.62%. So intriguing stuff. Dan, not a lot of paper lighting it up in spite of some headlines in the energy sector this week. What's catching your eye out there in WTI this week?
Well, I think you're seeing, I don't want to say complacency. You're seeing an adjustment in the marketplace to crude oil. if you look at it since the beginning of the month, really, or about the beginning of May, we have been in a $4 range, 76 to 80. That's one of the reasons why we're not really seeing a pop in terms of volatility. So it's been fairly contained. And you think, but geez, like you said, got the doggone Middle East craziness going on. You would think that alone would cause some issues here. But it really hasn't. And that is surprising. What we do see here is a market that's kind of gotten a balanced phase. If you look at the Middle East countries, they'd like to see it above $80 a barrel, closer to 100. They can balance their budgets at those kind of numbers. But we're not seeing the demand really soaking this up. And China, even though some economic numbers have improved, we're not seeing them coming to absorb some of that demand that everyone was expecting. Now, we've got OPEC and OPEC Plus, including Russia. They've taken 2 million barrels offline, and you would think that alone would cause the market to go up. But we haven't seen that kind of response. And what we've also seen in the energy market since Russia invaded Ukraine, we've seen an adjustment of energy flows globally. So is Russia still selling crude oil? Yes. Are there restrictions and sanctions? Yes. They can sell crude oil to a country that we don't have sanctions on, and we can end up buying that crude oil. So it's always something to keep in mind when you hear about tariffs and sanctions, how things do operate reality-wise from a country. Also, what we see is that Russia can not only sell crude to other countries, India, China, but they can do it in non-dollar terms. And that's a biggie. Russia, China, they do not want to use the US dollar. Crude oil is an example of a US dollar-based market that now we're seeing transactions that are occurring in other currencies or in gold. Tell you what, give me the equivalent of the crude oil price in gold, and we'll call it even. So we can see transactions being done that way. And what's interesting, you have to go back to the 70s. It's when the United States said to Saudi Arabia, tell you what, we'll buy your crude oil and we'll do it in US dollars. And Saudi Arabia said, sure, okay, let's do US dollars. So that's one of the reasons why we see it benchmarked to US dollars. And now it's not always true. So to sum this up, crude oil is in a balanced market phase. I look for that $4 range to stay here for a while unless we get something unusual coming out of it. So it'll be interesting, Mark, to see what you see around $80 or what you see around $75 to even $70 on the downside.
Well, I don't know how much I have about $80 or even $70. How about $62, Dan? Does that float your boat?
Wow.
That's what we're seeing out here. I was just trying to dig while you were talking into the block trade browser to see if I could see what the heck is going on with these because, yeah, kind of a weird week out here this week, listeners. Like we said, about 400,000 contracts on the tape, so not exactly blowing the doors off from a volume perspective. And of that, nearly half, 48%, going up in the July contract. Has about 22 days to go, so everyone's kind of splitting the uprights in terms of near dated and longer term stuff here in crude. Just going out about 22 days. You might be asking that future at about a 76.94. What is the vol? Vol's up slightly here this week, listeners, at about a 25.6, up about 2 points on the week, listeners. Not exactly huge, but again, if you look at equity vol, it's certainly about double that right now, certainly in the S&P. In terms of skew last week, the puts 8.6% bid, so all the action was to the puts this week. There's still a bid, but coming in a little bit, 6.7% bid. And we did drop, again, about 3.3% in that future since Monday, so makes some sense. You see those puts come in a little bit. The calls last week, 5.6% offered, so nobody really wanted them. This week, 4.2% offered. So it does seem like we have a pretty straightforward equity skew lining up in crude oil, which is telling us the options market, and it has been for a little while now, saying we're kind of fading this upside and we're looking more to the downside. And at least for this week, that has been borne out in the underlying action. Now, what is weird, Dan, as I mentioned to you earlier, I'm like you. You see this level, 76, 77, maybe you think some 80 calls, some 75 puts, maybe some 70 puts would be leading the dance this week, or maybe 72 half. Nope. 62 puts in July. That is the most active contract this week, going up 18,300 times. The good chunk of that was on Tuesday, about 13,000 going up on Tuesday. All of that opening. 1,500 on Wednesday, 4,200 today. The OI right now is about 14,000. So yeah, I don't know. I'm looking here for spreads. I don't see anything lining up. I mean, I guess it could be 1x2, 67 puts traded about 6,500 times. So that would be close to 1x2, 67, 62. Again, I didn't see anything. I didn't get a chance to scroll fully through the block trade browser, but trying to see what would float my boat. I guess 67, 62 makes a little more sense. You can buy one, sell two, and then if it blows through 62, you get some WTI put to you at a pretty decent level. But I don't know, Dan, 13,000 of 62 puts. I didn't have that on my bingo card this week, did you?
No, I did not. That really says something about somebody's attitude, huh? And going back to what you said, if we think about the global things going on that could have an impact here, we're just not seeing it happening. One thing is we have a stronger dollar. If the dollar does get weak, then you could see some action here, actually. It's a variable people oftentimes don't think about, but the dollar does have an impact on crude oil prices. And if we have a weaker dollar, that could help boost crude oil prices a bit. Theoretically, that's what it should do. But yeah, 62, no, it's not on my bingo card, that's for sure.
Well, here's a little bit more reasonable. We have the 75 puts also going up in July, so about 21, 22 days out, doing about 15,000 contracts this week. The big day for those, kind of a tie between Tuesday and Wednesday, 4,500 each. 3,400 today against an OI of about 14,000 and about 2,500 on Monday. Seemed like they were back and forth opening to closing. Again, 75 puts. Yeah, just a weird level kind of across the board out here, listeners, for WTI paper this week. I'm trying to do a quick scan on Tuesday to see if I could find what exactly was going on. I see blocks of 200, the Dees 45 puts going up on Tuesday. Let's see if I could find those 150 calls, a 50 lot of those. All sorts of weird paper going up on Tuesday, listeners. 150s again. I don't see these 62 puts here, listeners. Again, I have to do a little bit more digging after the show. But Dan, we've been talking energy for a while out here. There's some other products that are lighting it up. I also kind of want to get your thoughts. I'm sure a lot of our listeners do on this very head-scratching. You mentioned before equal and opposite. I think that applies very much to the equities market right now as well. So I think we'll head there next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, let's go into that drop down, pop out of energy, and then you're going to pop down one to equity indexes. And where we go from there could be Dan's pick. We could do S&P, certainly a big one with a lot of you. Russell coming online for more of you right now. And then, of course, even the Qs. But Dan, the thing I really wanted to get your thoughts on, and yet it's not a TWIFO topic per se, but it seems like everyone is obsessed with it. Even our guest, Rich Excel, last week on the show, he was writing his blog about it this week. It's NVIDIA earnings. It's inescapable. People have been saying for a while they are really the driving force now in the equity markets. Forget the Fed, forget all these other names you might think about. It's NVIDIA's market. We're all just living in it. They came in last night and once again kind of ripped the cover off the ball. It seems like they would be running out of room to grow, but that's apparently not the case out there. They're north of 1,000 again. And you think that would be carrying the rest of the market with it. And for a little while it was earlier today, Dan. But now even the NASDAQ has dipped heavily into the red. As we're talking here on TWIFO, listeners, NASDAQ off almost 0.75%. So giving up all the upside. I know it was up at least 0.5% this morning, if not more. Giving up all of that and losing 0.75% almost on top of it. S&P off nearly a full percent now, so it was well north of 5,300 earlier this morning. It's off nearly 50 handles now at about a 52.59. The Dow off 1.5% out there. I mean, it's just a strange market. Small caps off nearly 2%. We're getting to this equal and opposite thing, Dan, where Nvidia was up, and it seems like the rest of the market said, okay, we're going to go the other way, and we're going to do so aggressively. What are your thoughts, Dan, on, first off, where do you fall on that debate? It's Nvidia's market, we're just living in it, or is that kind of overdone? And then B, what do you make of this strange market we're seeing? We were calling it the Nvidia malaise, the Nvidia blues on our show earlier today, but I don't want to read too much into it, but it does feel like maybe this is kind of toppish. What do you think?
Well, first let's go to Nvidia. It truly is amazing. I mean, it now represents a $2 trillion market cap. And so since we're looking at the S&P 500 and the cubes, you're looking at capitalization weighted indexes. And so NVIDIA represents 5% of the S&P 500 and 7% of the NASDAQ, which is incredible. Sales up 262% year over year. So it's amazing to me, and you're right. It got at where you'd see it first, since we're talking about futures. And one of the advantages of futures, as you know, Mark, is that these things trade basically 23 hours a day. So they close at 4 o'clock Chicago time, and then they open at 5 o'clock Chicago time. Now, the way I think about that is it's a way to look at different time zones. So when I start looking at the market again at 5 o'clock, I'm looking at Asia because that's the next day in the morning in Asia. So how does Asia absorb what's going on? For example, today, we are falling out of bed. So we're going to stop, and then we'll start again. Asia now responds to what we're seeing. Does it bounce? Does it continue lower? And then about 1 or 2 in the morning Chicago time, we have Europe opening up. And so I get to see what Asia does at night because of where I'm located, here Chicago, and I get to see what Europe is bringing to me in the morning. And so when I think about that, then I think about last night. And last night, we know NVIDIA reported after the market closes. So when a company does that, the advantage of futures is it allows us to see how the market's responding to that. How is it absorbing that? And what we saw is markets were up. They opened a little stronger in anticipation, and they moved higher. So those highs that we saw occurred in that time zone as NVIDIA came out with their strong earnings. So everybody goes, whoa, Daddy, that's it. We're off to the races. And the expectation, I think, is what you said, that it's leading the way. Well, it did until, and who knows if this is the thing that caused it, but we also had the May flash manufacturing conditions, and it increased 50.9 versus 50 in April versus 49.9 expected. So it was stronger than expected. Service conditions increased to 54.8 in May. That's a 12-month high. And we think, well, geez, and it was 51.3 in April, 51.2 expected, and it's at 54.8. Holy Toledo. Service conditions look good. Manufacturing conditions look good. Well, isn't that good for our economy? Yeah. Then why are we going down? And my thought on that, it's because we're doing well. It means that two things. One, it could contribute to inflation. Two, the Fed will probably keep interest rates higher longer because of that. And, the stock market is not thrilled about that idea. They're always forward thinking. And, our sensitivity to this Fed funds rate at 5.25, 5.5. Why is the market so sensitive here? And I think what we need to do is to go back to 2007, where the Fed funds rate was 5.25. At 5.25, we had the whole real estate craziness of 2007, 2008, and so on. So here we are. We're back at that level again, son of a gun, and the Fed's not doing anything about it. So the market's very nervous, and we know stock markets are forward thinking. But now let's take it from the Fed's point of view. Are we at the magic 2% that the Fed wants? Not only the Fed, but Europe, the ECB, the UK, Japan, Australia, New Zealand, Canada, all these developed countries, economies are saying 2%. And, why 2%? Why not 2.5%? Why not 3%? Is it statistics? No, really. I think it just kind of seems like a number that everyone seems comfortable with. It's not based on some specific idea that you could say 2% is a magic number. You have the balance of full unemployment, you have low inflation, and the economy will flourish. Nobody knows that, including the Fed. So if you're the Fed and you've said 2% is our number, and these numbers today don't support inflation going down to 2% anytime soon. I mean, if you look at Europe, if you look at Germany, they're like a little bit over 2%. Their numbers have come down. Ours haven't. Our economy is relatively strong. It doesn't mean you and I don't feel it, though, when we go to the grocery store. Now, so there is inflation, and we do feel it as consumers, and we're seeing it with consumer attitudes. And that's a biggie, too, because consumer spending is 70% of our GDP. So if you're the Fed and you're now looking at these numbers, what do you say about that? You say what we've heard from Powell, what we heard from Waller, another Fed official, is that, and it's a change in attitude. From we're not going to be, we think interest rates have topped out. We're not going to be doing, to, well, there's a possibility we could increase interest rates. That's a change in attitude. And what they don't want, let's be fair, the Fed's got a tough job. But back in the 70s, they lowered the discount rate or the Fed funds rate. And then they had to increase it. They don't want to do that again. So they're leaving the door open. And what they say is, when the numbers justify it, we will lower the rates. And now they've opened a little more, saying, you know something, if we have a problem with inflation, which has been very sticky, we'll increase interest rates. We're not opposed to that. And look at the minutes from the meetings. There's some people talking about that. So the market gets nervous on that. I think what tripped the market up today was that really good economic numbers that we came out in terms of manufacturing and in terms of the service sector. We even had jobless claims came down to 215,000. It was 223,000 last week, and they were expecting 219,000. So we're seeing some things that really aren't too bad. But if you look at the attitude towards interest rates, if you look at the attitude of what the Fed has said, and if you think that high interest rates, which if you consider 5.25, 5.5 high, could we have a recession? And that's what the market's responding to, I think. And although there's no sign of a recession. So, I just think we're overdoing it. I think it's a knee-jerk reaction from the market. Now we're closing week today, or we may close week. Then we've got tomorrow, Friday. I love Fridays because they force people to make a decision. So somebody sold this today. Are they going to go home short? Well, right now it looks like they will. Do they want to go over a holiday weekend short? Are they that confident? So do I expect tomorrow to be like today? No, I do not. I'm not looking. And now we're going to have consumer sentiment tomorrow coming out. And next week, we got a whole slew of stuff. But I would not expect follow through on this. I'd look for a smaller range day, or even for a day that breaks lower. Remember, we got Asia's got to respond, and so does Europe. Maybe it goes lower, but it finishes higher than that low as people take a little profit going into the weekend. And one other thought here, too, is remember, we're talking futures, which means we close on Friday, normal close. But we open again Sunday night. And then we have an early close on Monday. So stock indexes, interest rates will close at noon. Metals, energy close at 1:30. Currencies close at 4. That's their normal close. And then everything opens again at 5 o'clock for the Asia time zone. So it's interesting. How do we finish the week up? How do people look going into the weekend? Like I say, I do not look for follow through. I think jerk reaction. It's the market getting overdone. I think that fundamentally. One other thought, from a price point of view, this is bearish. When it traded below 53, 16, 15 in that range, that became bearish. And it is closing bearish. And it does imply further movement down. I'm just not looking for a big move down. I don't think we have the fundamentals to support that.
Interesting. So you're not buying what the market's selling quite literally today, Mr. Dan. You're not buying.
Well, if I'm on the short side, I'd stay short. Nothing telling me to be a buyer at this point, but I'd be very cautious on the short side for that market.
Fascinating stuff out there, listeners. I was just trying to peruse while Dan was talking the almost literal tsunami of paper that is going up in the E-mini S&P options today, listeners. Over 3 million contracts, 3.1 right now. Obviously, a lot of contracts flying fast and furious. Even if you filter out some of the noise, yeah, the weird stuff's still going up this week, the 4380 puts and all that nonsense. What did catch my eye, Dan, was today, actually, the 5,400 calls. So these are going out tomorrow. These have 1 day to go. So these are literally 24-hour to go contracts now, listeners. And looks like they were lighting it up. There was only 7,300 open coming into today. The 5,400 calls traded nearly 19,000 times today, Dan. So clearly people were opening on the 5,400s in the S&P earlier today. Now, if past is prologue and this near-dated stuff, they were probably opening to buy these. So I would have to imagine, Dan, we're at about a 52 3/4 right now coming into this segment. Actually, a little bit below that now. Looks like, Dan, somebody got caught wearing it, opening some 5,400. Now, they could have overwritten a lot of those, but that's not usually the way these 0-day and near-dated contracts trade. Usually, folks are buying these. So somebody was feeling it, and I guess you could forgive them, Dan, coming on the heels of NVIDIA blockbuster announcement. All the markets were up to start the day. They were feeling it. They were feeling 5,400 by tomorrow, and at least for right now, Dan, that seems like it's going to be a bit of an ouchie. What do you think?
Oh, yeah. Yeah, I'm with you. But I also agree with you, Mark. It's reasonable. That was not an unreasonable trade. And it's one of the powers of options, right? I mean, if they bought the 54s and now it's falling out of bed, well, okay, they're going to have a hit, but it's not a forever hit.
Unfortunately, Dan, this is not a forever show either. You and I could talk about the vagaries of the market. I'm glad we had you on today to help dispense some wisdom to our listeners who might be a little bit confused about what's going on out there. Speaking of our listeners, Dan, while you were talking, we did put a flash poll out to our audience. We asked them just what we were talking about. Is this sell-off after NVIDIA's blockbuster earnings? Is this is this a top for the market or just a break before the next leg up? And 2/3 of them exactly right now, Dan. It's only been up for about 5 minutes, but in the early voting, 2/3 of them, Dan, agree with you, saying, heck no, they want to buy more. And exactly a third saying, heck yes, this is crazy. Get out there, listeners, at options. We'll let that run for the next day so all of you can weigh in. And then we'll talk about the final results on vol views tomorrow. But yeah, fascinating, maybe surprising development for a lot of you out there. We were speculating on the option block. It does feel, just the way this today's action is feeling, it feels kind of toppy, but then again, it's hard to read too much into any of these moves. And of course, as Dan was pointing out, we do have some interesting other fundamentals outside of NVIDIA that could point to some different directions. So fascinating stuff afoot. And Dan, if folks want more on this, and I guarantee you they do, where should they go? What should they do?
Well, I do have a website, dangramza.com. There's a free video there where I look at stock indexes, currencies, interest rates, metals, energy, ags, and it lasts 2 minutes or so, 3 minutes, depending on what's happening that day. And you can also get an email that will come out whenever I post the video. You get an email that tells you that it's available. And you can also go back over 10 years on a daily basis and see those videos are recorded and say, okay, what was he saying when this happened? There are red and green lines there which represent buy and sell levels. These are not buy and sell recommendations, just ideas that I'd like to share with you. And if you're not familiar with futures, a place to begin is just watch them. And these videos can be one of those tools that you use just to get a feel for how these markets trade.
There you go. Check him out, dangramza.com. If you like what he's laying down here on the show, listeners, a lot more to be found there. Gramza is the place to go to find all of that. And of course, you know where to go to find all things TWIFO. CMEgroup.com/TWIFO is the place to go for all these reports we're breaking down throughout the show. And of course, if you want to check out a little bit of CVOL, and who doesn't, CME Group and CVOL, just type CME and CVOL into your browser. You will go right to that dashboard. And that's not limited. Anyone can access that. And you could pull in the aggregates, follow along, set the date range for a week, and you can see exactly what we're looking at here on the show every week. That is going to do it for us on the network today. But don't fret. We'll back again tomorrow to see what the heck else the market has in store for us tomorrow, breaking down the wild world of volatility on Volatility Views. And then after that, one final time, for our pro folks, we'll be talking about a whole bunch of unusual paper over there on Options Oddities. So make sure you check that out at theoptionsinsider.com/pro to sign up for all that fun. Then we're back again, not on Monday. Markets, of course, closed for the Memorial Day holiday, but we'll be back again next week with a little bit of TWIFO next Thursday. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.